will be as swift as I can without diluting too much of the message. So we have had probably, or depending on what metric you look at, one of the worst bear markets crypto's ever had. It's arguably saying that 2015 was probably the worst. But yeah, it's pretty bad. And I have to say this, I have to get it out there. Hodling, as in blindly hodling, is literally the dumbest thing you can do. And I see this all over the place. Just hodl, you'll be fine. Now, in theory, or mathematically, yes, hodling is great. Warren Buffett has been doing it for decades. But that's the key word there, decades. So I'm getting loads of feedback. I don't know whether it's that part of the stage. I'll try over here. Yeah, Warren Buffett's been doing it for decades. And that's the key thing. If you are a person that has discipline, I think it's these. Can you turn these off? Anyway, so he has the discipline to hold something for decades. So therefore, general market cycles, whether it's a secular bull bear market, doesn't matter, he's in the money because ultimately he's buying cash flowing assets. He's buying profitable assets. And as he says, fag butt companies, where there's still a bit of a value there. But the thing is, people that play with crypto have zero patience. I mean, most people in crypto, because they find stocks too boring. And so people don't hodl. They embrace the hodl mentality and, you know, diamond hands and laser eyes, but they don't do it themselves. And the people that just shout hodl, hodl, you know, they're the ones buying Bitcoin at 69K and they're still holding at 20K or 19K. You literally just, you succumb to years or multi-months of just being underwater, and then you just turn into a hoper. That's it. And if you're going to play the markets properly, first of all, it's a business. You're not dabbling. It's not a hobby. If you treat anything like a hobby, you'll get hobby-like results. You've got to treat this like a business, which is why I'm constantly harking on about statistics, probability, and system expectancy. That's the only way you can nail this. So just blindly hodling is just, I think, a naive thing to go about the markets. And in reality, it looks like that. That's business as well, not just crypto. It's anything in life. Whether you wanted to become the world's best sewer or a tattoo artist, everything looks like this. So, got a ghost that likes crypto. So the one thing that you always see, whether you're new here or not, you may have heard me talking about base support, and it's the simplest thing about trading. It's not hard. You simply connect the lows of key levels and draw a base trend line. And always respect base support. Most people get emotionally attached to the things that they hold. They're like, oh, it's my baby, I'm a Bitcoiner maxi or whatever, I'm going to hold it forever. When that base support gets breached, you need to get the hell out of there. So this is actually Bitcoin. You can see it peaked just below 70K. I was drawing, and anyone that's been around for a while, you hopefully remember the stuff I was shouting out. Once that baseline got breached, I got out. So I had some trolls say, oh, you didn't catch the top. Well, the thing is, no one catches the top. Oh, you only got out of 50K. Well, yes, I got out of 50K. Why? Base support got breached, and I exited about 50, 52K. So it's all part of the system. I get out of anything that breaches base support, no matter how bullish I am. And I've said, you know, every single time I look at fundamental analysis and then act upon it, I lose money. You've got to stick to the charts. So when you map out base support on Bitcoin, we all had so many opportunities to get the hell out. So many. So the first one was up here, 50K. Then you had another massive support level here, which got breached and koboed. And then a very big one here. And then here. There's so many opportunities. And right now, it's breached another one. So everyone's getting really bullish, I see. I'm bearish as hell right now. So these little, oh dear, come on PowerPoint. There we go. And right now, we have just breached a very key base support level. So we got to be, hence why I'm trying to load up all the shorts. And let's focus in on what's just happened. There we go. What is that? What pattern is that, folks? Kobo. Yes, kiss off, bugger off. I've literally made a living off Kobo. So, yeah. So, this is beautiful. Not that face, though. Okay, you get it. How do we re-enter the market? Now, there's a really bad way to do it, and 4 somewhat okay ways. And unfortunately, I get this question a lot. Which is the best method to enter? And the typical consultant answer of, it depends. And it's true. It's not the answer you want, but context is everything. It depends who you are, your personal circumstances. I'm all right, because if I get a big slap in the face, I've got my businesses, that will just replenish my cash, my pot, so to speak. So I can have more swings at the market and heftier swings at the market. Whereas if you're, let's say, you've got a full-time living of some sort, wife, kids, or husband and kids, whatever, you may not have that much, or the same bounce back ability, let's say. So it really does depend. However, what you should not do is option number 1, which is what I call the NOOB way, snatch and gut hodl. So what this means is, let's say you're riding an asset, and then all of a sudden it dumps. So what then happens is, you're like, okay, massive dump, I'm going to buy in here, and then hodl. Well, guess what? When it does that again and again and again, eventually you're going to be like, you will capitulate. Well, not you guys are trained, but the general market. At some point, they will capitulate. Everyone does. And that's when you start seeing it's going to 0. And that is, I can't wait until I start seeing that. That is like the best contrarian indicator. We haven't had mass capitulation properly yet on crypto. Yeah, you're snatching, as in you're buying in which you think is just a gut feel low, and then you're hodling blindly. Not good. So for those of you who do snatch and gut hodl, well, when Bitcoin dropped from 69 down to sort of 44, 45, I guarantee you there were hordes of people just going, yep, this is definitely going to bounce back up, 100K Bitcoin by Christmas. And yeah, that one of the probable outcomes back then was, there was a reasonable chance that Bitcoin could have hit 100K, but it didn't because it breached that base support. And as soon as it breached base support, I stopped that 100K by Christmas model went out the window. So I started looking at other models. And again, even if you didn't buy, sell the kitchen sink and put it into there, you probably would have put it in there, or there, or there. So snatch and gut hodlers, they always get burned. So here's the first, reasonable way to go about it, which is what I call support exit, resistance entry. So typical market, you have bull market, then a bear market. As I say, you just draw base support, and as soon as base support breaches, you get out. Okay? Lose all emotion. Just get out. And then you re-enter once base resistance has been breached. So you get out there, then you draw your base resistance, and you just let it fall. Just let it fall until it breaches. And that's when you get in. That is the most stress-free way of getting out and getting in on a market. It's mechanical. There's no thinking involved. You literally just wait. You're stalking the market to either break this level and then break this level. That's it. Get on with your life. Run a business. Do whatever. Again, here's an example of Bitcoin. Key level got broken over here. So, and then you could have let it drop from, say, 50 all the way down to 30. And then as soon as it broke here, even if you got in late, you could still got in around 35 and then rode it back up to 60, maybe. I personally didn't do that. I was still in cash. So I actually got out here and I was shorting bits and bobs, but I didn't buy back in here. See, this is where I let fundamental analysis screw me over, because I was looking at the world is falling to shit. And I thought, this is going to get ugly. So I actually just let that ride away. I didn't make anything there. But it doesn't matter. You don't have to be in every winnable opportunity. Another crude saying, I'm saying this for the newer people here, it's like being young and single in a nightclub, 100 hot girls there, and you're like, oh, yeah. And then crying every time one girl leaves the club or one girl gets with another guy or whatever. You don't need all 100. 2 will do. One would do. So one will do. Sorry, that's quite crude. It's a numbers game. And I literally have old Air Force buddies who would literally play that numbers game. I remember one night we went out and he was like, a day to ask 200 women for sex. And he was like, done. And he literally asked, I think, he got to about 120, and then someone said, all right. And then he just left the club with it. I was like, know each other. Well, not that it cares, but yeah. And he was like, 120. And he was the 120 man for ages. So literally, and he's fine-tuning. He was like, right, I'm going to spend the least amount of time possible to get the maximum volume. So he was like, want sex? No? Okay. And he's literally just moving on. This was across like several bars and several nightclubs during that night, though. Anyway, moving on. Simple sidestep, or 6-6ing, as I used to call it on YouTube. So a sidestep is something which I do on an asset which I want to reaccumulate, or no, accumulate, and have a bigger holding at the bottom of the bear market than I originally had. So typical market, you can, again, use the base support to get out. But let's say you've got huge faith in this. So you have to use this with other techniques like rising compressions, bearish rectangles, all that sort of stuff. And so what you do is you exit, you wait for a leg down. It has to be a meaningful leg down, and then you get back in, okay? So obviously it depends on the market. You can do percentage drops, whatever. But you get in after, because when a market falls, you do always have that big devil candle, right? A big overextended red candle. That's when you want to buy in. Now, the reason behind this, now I know it sounds a little bit like gut snatching, etc., is that you ultimately don't know when the market's going to reverse. Remember, as traders, we are not market predictors. We do not predict the market. That's when you'll get burned. We are simply we're just acting on a bunch of different scenarios. And we don't know when the reversal will come. It could happen here, it could happen here. So you buy in somewhere around here, even if you're late and you get end up here, it doesn't matter. But then the moment the market is showing signs of bearishness, and it does, there's always a bearish sign. Sorry?
Rebase the clock.
Sorry?
The rebase.
Yeah, exactly. This was beautiful rebase. Yeah, it was beautiful. But here, for example, there could be a rising compression, etc. So a good example of this is Time Wonderland. Do you remember that? So at the time, from a fundamental point of view, absolutely amazing. It was basically the world's first crypto SPAC. It was this crypto, it was this rebasing thing, but it had $1 billion in cash. And it was out there, just its whole purpose was it would buy up loads of other crypto projects and give revenue yield to holders. So from a fundamental point of view, you know, it had good tokenomics, it had, well, not tokenomics, from a old school business valuation point of view, it was like, shit, $1 billion in cash. Anyway, long story short, it went to shit. But anyway, as it was plopping down, I was doing my simple side steps. I was buying in, so let's say I had 100 time up here, I let it drop, I'd buy in down here, I'd then have, say, 150 time. It looked like it's about to drop, so I'd then sell again, let it drop, and by the time it's gone all the way down here, you've now got like, you've probably doubled your holdings. And you just keep on doing this and doing this until the market does recover. Remember, we don't know when the market will recover. But we have an idea when it could recover, when it breaches base resistance. Ta-da! And then you do this. Now, with time, I genuinely believed it would do all right, which is why I was doing these side steps. I grew my pot 800% during that fall. 800%. And then for those who are not familiar, it turns out the treasurer was a convicted fraudster. Hence why I went to pot. Yeah, not good. And even worse, the reason why I definitely exited the suit and I never touched it again is because the founder, Daniel Siestagali, he knew about it a good month or so before he was outed. So that, to me, shows that was very poor judgment of CEO there, that he was trying to hide that his treasurer was a fraudster, convicted felon, still wanted in the States or Canada. Bad, yeah. So, I mean, if that was me and I found that, I'd be like, right, boot, and then tell everyone. So, but he tried to cover it up. Not good. Anyway, so that's something I got stung on. However, from a trading perspective, I freaking nailed it. As in accumulating more of time tokens, but it turns out those time tokens ended up worth nothing. And then finally it will break and then hopefully recover. And this is an actual picture of time. As you can see, there are so many occasions where we did little side steps. And as Adam said, there was a thing called a rebasing thing. And I can't remember, every 8 hours, there'd be a new rebase. So people would sell just before the rebase. It would then dump. And then, yeah, and you buy it. Yeah, it was like printing money for a little bit, honestly. I was making like 25 grand a day for months. Anyway, ended up in tears. So the third way, the technical, in fact, Alexander, you did really well as well, didn't you?
Thank you.
Even despite. So, technical scaling. So this is, again, a very good way to do this. When the metrics and indicators illustrate that we could be nearing a secular bottom. So it's nearly always around a huge level of support, whether it's a psychological number like previous all-time high or whatever, and it has to be some sort of big level of support or a bunch of them. So what happens is as the market's falling down, you think, oh, okay, this is market's there is a strong probability of it falling down, and you want to basically load up the horse around here. What you don't do is just go all in at whatever point that is, because you always have to approach the market with the understanding that you will never, ever, ever, ever get the best entry, ever. You will never get that bottom wick to the penny, never. You will always be out. You will always miss the bottom by about 20%, as a rule of thumb. You never sell at the top, you never get in at the bottom. You just got to be happy with that nice meaty 70 to 80% of the move. So with the technical scaling, you could basically put 4 rounds in the chamber and go, right, I want to get in, you can anticipate that this could bounce off this level, but everyone's going to front run everyone else, so it could actually reverse without even touching that level. So you want to get in just before it, quarter of the pot. And then at certain levels, you could equally space it out, let's say every $1,000. Let's say it's Bitcoin, you could go, this level could be, I don't know, 16K or 12K, get in at 13, I don't know, 9, 8, 7, 6, whatever. And then wait. So best case scenario, something like this happens, you get your full load in, and you get some sweet low balls in, and then moons. That's a fairy tale story, though. It's quite rare that that actually happens. What normally happens is this. You set everything up right. You're like, I'm going to absolutely nail this. And then this happens. Yeah. And I think we've all had our fair share of just absolutely missing everything. But again, that's part of the game. You are not, as I always say, hit rate is completely irrelevant in trading. Completely irrelevant. So typically, you do these technical scale-ins when we've already had a sustained bear market. So if you look at Bitcoin right now, it's dropped like 74%, I think, something like that. So when you look at every other crypto bear market that it's ever had, or I say in history, it's only been around for 12 years, they've typically dropped 70 to 80%. So historically, from an empirical point of view, Bitcoin is basically, we're near the bottom. Put it this way, if it goes, so it went from 69K down, and let's say it goes to 12K, right? Right now it's hovering at 19,800-ish. If it goes to, right now it's, I think, something like a 70, let's say 75% drop. If it then goes down to 12K, which seems horrendous, it's actually still only like an 80% drop from top of drop to bottom of drop. So for the total crash, it's actually not that much of a deal. But if you went all in now at, say, 19K and it dropped to 12, you're sub 40% straight away. So in the long run, it doesn't really matter too much. But yeah, so right now, what is it? It's the 17th of September, 2022, for those watching this on YouTube. I am quite confident that Bitcoin is in the bottom, is bottoming, as in we're in the last 3 to 6 months of this bottom. Let's say last 3 months of this bottom. I cannot see Bitcoin falling 95%, but we'll see. Therefore, my strong, what I call the Gandalf level, is 12K, as I've mentioned on the Trading Pub yesterday and way other times. So I would like to do my technical scaling in around 12, well, actually the first one is 16K. I think the next leg down is to 16K. I'll do my normal side step and load up. And if it looks like we'll drop again, I'll get out. But ultimately, I'd like to start doing my technical scaling around the 12K level, because there's another big trend line at 8K, if you can remember. So that's me. That is what I'm doing. And again, this may happen, and this happens a lot, where you do a technical scaling, but you don't get every entry order filled. That's no biggie. You at least got 1 or 2 of them. And then you just basically reacquire as the market's going up. Obviously, the market doesn't go up straight away. You have time to enter. So the 2 which weren't activated, you just get in on the way up. Therefore, your average tends to be around where that core level is. And last but not least, all of them. That is ultimately what you should do. You should do all of them other than the noob way. So, and guess what? This is exactly what we've been doing with Bitcoin. This is Bitcoin right now. We exited roughly 50K where base support got breached. And then we've been buying in it. We've been sidestepping along the way, haven't we? I mean, how many trades have we placed in the last, I don't know, 6 months? No, not thousands, hundreds though. Just look at Telegram, it's ridiculous. You scroll for ages and it's only like gone back a couple of weeks. But we've had plenty of opportunities, loads of base support levels that have been breached, and we've nailed it, which has been great. But each time, the market gives us opportunities to get in and then also get out. I mean, that is like a couple of months. So we have opportunities. So now, right now, as I say, I would like to start my technical scale-in around 16K, and then I'm going to have more than 4 bullets in the chamber. I'd like to do it maybe over 6 or 8. But yeah, I'd be very happy buying Bitcoin around 16 to 12K. Even if it drops to 8, doesn't matter. So that is my rather rushed thing about re-entering a bear market. But ultimately, what you need to do is draw this line going all the way down here. And just wait, really, ultimately, until base resistance gets breached. So this is somewhat, the technical scaling is our attempt of trying to preempt the bottom somewhat. But yeah, ultimately, the most chillaxed way to do this is just wait till Bitcoin breaches base resistance, whenever that will be.